Excuse me, can you please pass the sauce?
How we doing, everybody? Welcome to episode 8 of Everything Validated podcast. I am your host today, Mr. Malik, the engineer, aka YDM Beats. Before we get into today's episode, I just want to say thank you for those who have been watching our new videos and have noticed our rebrand on the social media. Let us know what you think. Had to update the logo, just so it can please the eyes a bit better and make more sense with our brand. Definitely more comfortable with that one going forward. You would have noticed some changes to the YouTube, the banner, the links, reorganization throughout our social media. And we've been going hard on the TikTok. Okay, so we appreciate you if you've been appreciating us through those platforms. If not, please take some time to catch up with us if you want to see more. Okay, but once again, welcome to the Everything Validated podcast, the show where we blend hip hop, crypto, and finance together. Okay. Hope everyone had a great Memorial Day weekend south of the border. A lot going on right now in the financial markets. I am doing this week's podcast via Zoom. Felt the urgency to get one out there, so I'm trying this out. Wish me luck. There's been a lot of advances in the Everything Validated technology that's allowing me to do this from home now. So that's pretty dope. Mr. Rafix has been sent a link, so we might get a guest joining us about halfway in. It's pretty exciting. Some brief talking points. I mean, we being crypto fans and followers, we're aware of the Luna situation right now. I'll delve into that in a few moments. In other news, Fannie Mae has announced a recession since we last did a podcast for you guys. So that's also huge. Markets have been in a huge downturn overall. Crypto, finance, crypto stocks, bonds, futures. It's not looking too green. I want to talk about ways you can maybe protect yourself from that, rebalancing your portfolio and the importance of that. And of course, as usual, we're going to provide some resources and definitions. Okay. So first things first, I'd say the most interesting thing to me that's happened since the last pod is the Luna situation. Okay. So Luna is a blockchain. Terra Luna Luna is a token. Terra is the blockchain. They work together to provide many services, but one of the main cues of the project was the Luna token and the Anchor protocol. So just briefly, because there's a lot of videos and articles you can check out to break these projects down, and I'm not really a proponent of the project, especially after a situation like this, but briefly, the Anchor protocol, what they were promising is 20% interest returns annualized each year. Of course, we can all know why that's pretty ridiculous. I'm going to attach a couple articles about what happened, but just briefly, their first stablecoin had an algorithm failsafe to buy more Bitcoin to prop up its value. Once it noticed it was losing its liquidity, well, an attacker noticed that, and this person had a lot of capital. They went ahead and did a couple of attacks that costed several dollars, like millions of dollars, to test the liquidity and the algorithm behind Terra Luna. Long story short, it started failing when people noticed it was losing its ability to cover the interest payments, to cover that liquidity, and the panic of the market of people trying to get out. It started failing. And then I think what the attacker did was then sold the stable coin or something along those lines to then force down the value of Terra Luna. So they noticed that, started an uproar the value of Luna went to zero. So then, since then, they've been under investigation, still are, in terms of South Korea and Terra. Oh yeah, Terraform Labs. Terraform Labs is also under investigation as a result of this. And what they've done since in the past couple of days is launch a 2.0, not a hard fork, a whole new attempt at this Luna experiment. And some websites have reported a shaky launch, like cryptobriefing.com right here. I was checking out an article on CNBC, and they were highlighting that it plunged. Okay, the old Luna is still there because it resurfaced as Lunaclassic, but the new Luna, meaning they updated their algorithm, their white paper, their project objectives or mandate, I should say, and they're now calling that the official Luna we know. So the ticker Luna, Luna. They say the new Luna is already crashing as well because, again, the whole Terra USD stable backing, it broke confidence in a lot of investors. And that just brings me to my point. I mean, I said all of that to say it's very important to do your own research as to the projects that you invest in, the stocks, the commodities, whatever you invest in, even if it's a business, your friends. It's important to test their track record, okay? Because it has been alleged by some people in the finance space that the founders of Terra and Luna have done some rug pulls like this before. So, I mean, that would also bring further discomfort as an investor to find that out. So why would you want to find out after already being invested and lured into that 20%, which is kind of unrealistic? Because if we can get 20% on anything, right, which is why some people borrowed money from the banks to put into this anchor protocol offered by Terra Luna, they thought they were outsmarting banks. They thought they were outsmarting, mutual funds, hedge funds. And I mean, we're talking about the 1%. So that's not something that's going to be very realistic. And why would you want to regret the behaviors of your investments leader rather than vet the investments leader before investing, right? And I think that's a very important underlying lesson from this whole Luna 2.0 Lunaclassic experience. Every investment has risks, many forms of risks, and that is true. Still a proponent for crypto, but I would say let this not be a deterrent for the hope of the cryptocurrency space, but let this be a reset of sorts for integrity in the space, where the value is in the space, and how we do research for the projects in the space. I mean, we have discussed Anchor Protocol briefly on this podcast with far less information about it in those previous episodes. Understanding now what I know, I'm glad I didn't invest, right? I have very few holdings in crypto, full disclosure, and stocks as well, but they're very intentional holdings. And I do feel comfortable with who I invested in. Okay. But that also comes with rebalancing your portfolio. And it's not a detriment against you if you have some losers in your portfolio or some things you don't trust. A downtime in the market like now is a great time to reassess the weighting of your portfolio, to reassess the objectives of your investments, and then take a look at those and think, okay, is everything where it should be? Can I put more weighting here since this one has worked out? Should I maybe get out of this garbage investment if you wouldn't hold it for 5 to 10 years? Because that's a way of simpling things down. Not everybody is a day trader. If we're looking to invest long term, we want some winners in our portfolio. Okay? So if you've been affected by Luna, I feel it for you. because I'm talking about a fund went to zero, 99% of the funds lost. There has been some type of reallocation, I should say, uh, on that Lunaclassic blockchain. I've heard that some people that had Luna got something back. But again, I mean, already reports that the second launch hasn't gone well. And it's lost its position on in terms of the market cap alone. Like, it's lost a lot of, it says it's lost, sorry, CNBC here says $40 billion worth of a collapse. And I'm not sure about you folks, but if a bank did that or if the government did that, well, let me not say the government, but if a bank did that, I wouldn't feel too confident putting my money with them. Okay. If Apple, if Apple, Microsoft, any company that I'm invested in did that, that would make me rethink things, and definitely do a deep dive as to how that company is operating. Okay, because I want to know that they're protecting my best interests as a shareholder. So that being said, what do you think about the stability of stablecoins? Do you prefer your stablecoins backed by fiat, which is traditional currency, US dollar, Canadian dollar, euros? Do you prefer your stablecoins backed by a crypto, a commodity, or an algorithm, or a hybrid, which is kind of like the Luna situation? Or do you not like stablecoins at all? Some view it as the money market account equivalent for stocks, right? So if I'm not investing in stocks, but I just need my money ready to go on those stocks, there's money in market accounts that I can easily transfer. Some people want the money in the crypto wallets or the platforms so that they can easily make their next trade when the opportunity arises. I say that to say some people want to just say, I got $1,000. I want a crypto that's going to keep my $1,000 so that when the opportunity arises, I have the same buying power. And that's why some people are using these stable coins. Is that your approach? And if so, what do you think of it now? Or are you unaffected by this because you were never taking use of the Terra Luna, right? Are you a US dollar tether fan? Because I think it's really interesting. I mean, for me, it begs the question, like, how can I trust the creators of this if they're able to then take a vote as to their people, which I feel like is under duress, right? Because they put out a vote and got 65% or more saying they wanted to relaunch Terra. So, of course, I want to relaunch it. I lost money. I want to relaunch and get my money, right? So it's like, of course they said yes. And then my thing is, what if the guy that created Terra Luna is the attacker as well? Because apparently the attacker made 800 million. So, I mean, that would be a hell of a lick, hell of a rug pull if I'm them, and who better understands how to hit the switcheroo than the creators, right? And I feel like education in blockchain is still something that, and regulations of blockchain is still something that needs to be accelerated before value can be properly allocated within this space. There's going to be a lot of things like the NFTs coming down, the whole market losing $1 trillion in terms of cryptocurrency. We're now going to have this reset opportunity, not only for investors to take up some positions at a steep discount, but for us to also realize maybe we're overpaying. Maybe some of these projects are FUD, and I think that's a positive. I'm an optimist, but I definitely think that's a positive for the cryptocurrency space. I'm sharing my screen here. Hopefully you guys can see it. Okay. This is just a quick look at what's going on on coin market cap, excuse me. All right, we've got the 1 day, last 7 days Terra Classic to USD. as you can see, it's just completely gone to shreds. We're talking something that was 90, 80, $85 to zero. Okay. Can't be a good feeling. And now they're ranked 214th, and I'm pretty sure they're top 20, maybe even top 10 before that. And how do I stop sharing my screen? Here you go. All right, bear with me. I'm not the best verse on Zoom. I'm just trying to get this message out to you guys. I thought it was very important. Okay, I put my phone on silent. I got the little space in the crib with nothing on the wall, just so I can deliver this message and keep everything validated. But onwards, I mean, I just want to say thank you to those who have been seeing me wear many hats, as well as my partner, Mr. Rafix, in terms of this podcast. We also have been providing hip hop beats, okay, and how-tos and one-on-one tutorial sessions. So if you need help finding your outlet in terms of musical audio production, a musical mix, an instrumental mix, or anything of that sort, DJing, please check out the rest of the videos on our page. We do have beats you can relax to, you can write to, you can purchase. Just get in contact with us or follow the links in the description of those videos. And if nothing else, just give them a watch and give them a like. Let us know what you think. We're trying to be the best at what we do. Back onto the finance. Okay. I think it's very important for people, for everybody. Like, this goes to my family, this goes to everyone who may be listening. It's very important for us to educate ourselves, okay, on finance, especially whatever our weaknesses are, and on ourselves. Okay, so in times of recession, in times of duress, in times of idle time, in times of change, it's always good to be consistent in educating yourself. Okay, I think self-education is a never-ending journey that is probably one of the most rewarding things in my short life that I've done so far. And recently, I've been rewarded by educating myself in a way that, I mean, I'm really loving it. So I'm taking a course right now that I got into as a result of the pandemic and actually having to do a career switch. But this course is allowing me to be better at delivering this podcast. So, like, it's a financial course, and I will share with you as soon as I'm done. I'm one of those. It's not a secret, but I just want to see it through. But that course has changed my confidence towards finance, and I am also learning through teaching. Okay, and I want to just share something quickly from my course. To my point of rebalancing the portfolio. Okay, now if it'll allow me, I will share my screen again. Okay, because I want you guys to see this. This is from my textbook. Here we go. Okay, y'all can see this, right? So when we're thinking about rebalancing our portfolios, okay, I saw these things here in terms of classifying the industries by reaction to the economic cycle, okay? And I thought that was interesting because how often do you hear people say, I invest by economic cycle, right? And I do promote buying and holding, passive investing, a simple strategy, because I'm trying to get this so that my mom can understand. You know what I mean? I want to make it so people that have absolutely no financial acumen can feel the confidence to take on investing. Where they haven't. Okay, so what this textbook is trying to say here is, for example, there are cyclical industries, defensive industries, and speculative industries. Okay, so when they get to talking about cyclical industries and cyclical being a reaction to the economic cycle, like, for example, they provide commodity as a cyclical industry, in terms of the commodities, specifically forest products, base metals, chemicals, it's meaning that there is a cycle in the year for this. Okay, there's a time when these things will trade better, and a time when they might trade worse, maybe because of supply or demand. Okay, I'm just gonna try to keep it as simple as I can to get to my point here. Okay, there's defensive industries. Defensive industries really don't have a draw like that big of a drawdown. They stay top investment quality throughout all times, the good and the bad times. Okay, for example, banks. Okay, and utility companies, and then you have speculative industries, which are way more risky. Okay, it's more something like it's in the name. So something that people are speculating can go up, but it's not really based on facts, not really hard materials that can prove it will go up. But if it did, it probably would have a bigger return than the other few. How do I stop this? Here we go. So the reason why I brought those up, the reason why I brought up the defining industries by economic cycle is because of the economic cycle we're in right now. For some, it is worrisome. Okay, it is a recession again, or at least the beginning of one. It's hard. I mean, bouncing back from a pandemic straight into this, some would say, it's been a tough couple of years, and I definitely hear that being a young man living on my own. But I still think there's many ways we can figure it out, and I think it's an opportunity for us to see how we can best apply our knowledge in these times, right? Meaning take advantage of a recession. How can we do that? Some people like trading shorts and puts and trading to the downside. But what I'm talking about right now is still investing. It's still buying, not selling, not shorting, but it's sector rotation. So switching maybe your portfolio around for times like this, or diversifying your portfolio for times like this to include defensive stocks, defensive investments that even during bad times still perform well. So for example, you can imagine how a utility is never really going to miss a payment, right? Banks were still getting payments during the pandemic. And I was actually working at a bank, although there was mechanisms in place to help people who couldn't make, let's say, their mortgage payments and stuff, they were still getting their money. And like, you're not going to not pay your mortgage for too long. You know what I mean? So utilities and banks are two examples of defensive stocks that are still going to do well during this bad time. It's not financial advice, but if you were to put your, some percent of your portfolio in a bank that even pays a dividend, you can be better off than another individual stock like tech or something else that might not be as defensively oriented to hedge against a drawdown in a time like this. Okay, so I saw this dope article from stocktrades.ca. I'm going to go ahead and link it as well. The article is titled "The Top Canadian Bank ETFs to Buy in 2022 and Beyond" by Dan Kent. And I thought it was really interesting because, I mean, how often do you hear people say, let's invest in Canadian bank ETFs, right? I do follow a lot of Canadian investors that speak knowledge on YouTube, and or at least their opinions and observations. And I appreciate that because, of course, we face foreign conversion fees and other fees when investing in companies that aren't on the Toronto Stock Exchange, being in Canada, where I am today. So I like this one, especially if you want to go through a Wealthsimple or something and keep the fees low. Then Canadian stocks help you do that, or Canadian investments. And that being said, this is a list of, well, I guess who Dan Kent thinks provides the best Canadian ETFs for banks, which would be a basket of Canadian banks. And we have a big five here. Some argue six in terms of banks in Canada. And these ETFs are going to try to spread out the weighting and hold the banks in their portfolio so that you can be exposed to all the banks, be defensive, get the growth, maybe get the dividend that some of them provide, but also not have the risk of being in an individual bank, right? And you may not know enough about one of them, but you do trust all of them together in the form of an ETF. Well, that's a diverse, lower risk style of investing. All ETFs, all indexes are going to provide way more diversification than an individual stock. So, of course, the question is, what are the top banking ETFs? I can just read you some tickers that this article goes on to explain. I do recommend taking in the article, give it a read, do your own research before you make any investments off this article, but it's just opened my mind to a way of thinking that tied back into the education I'm getting right now. And I just feel like it's all coming together. It's very nice. So the top one they have here is the RBC Canadian Bank Yield Index, okay, ETF. So that's ticker RBNK. Okay, they do talk about ZEB, which is BMO Equal Weight Banks Index. Okay, they have a BMO covered call Canadian Bank. I do love covered calls, and I think I'll do an episode on covered call stocks down the line. You guys can comment and like if I should do that. But I think covered calls are a great investment. And for full disclosure, I am holding a covered call ETF, and it's one of my better performing holdings because of that covered call aspect. Like a covered call is in many ways like insurance on your investment. That's a whole nother episode. And most definitely, when it comes to defensive and cyclical stocks, if you are holding some, how have they worked for you? You know, share that with us in the comments. You know, call into the next episode since this is on Zoom. I'll put a public link out for those requested, or maybe for the patrons. How are your defensive stocks and how is your portfolio rebalancing going amid this time? Or are you just so happy with your portfolio that you're just holding on for the next period until the economy has an uptrend again? Okay, so we covered Luna. We covered how to maybe transition to some defensive or cyclical investments. Okay, but in other news, I would love to say it gets more happy, more red on the screen. Okay, gas has passed $2 Canadian in Toronto. Just a moment of silence for that, because that's crazy. Like, that is completely crazy. I'm not an oil expert, but I feel like I should have invested in oil if gas was going to do this. Just, you can never be too diverse, right? Because I'm sure some people are invested in oil, or maybe even some type of oil crypto I don't know about, and they could be winning. So there's always an opportunity, right? Everywhere, as much as for many people who drive, take Ubers or whatever, gas going up is kind of a detriment to the everyday wallet, but it doesn't have to be, right? So that's why we do stuff like this podcast, to highlight ways we can align ourselves with the positivity and the opportunity rather than the scarcity, something that my community does all too often. So gas is up $2. I've been riding my bike a lot more. That being said, summer is here, it's warming up, and I feel the need to be outside. It feels great, going to the beach, going outside. But if you're an adept investor, maybe you can share with us in the comments, what are some opportunities to invest that you get just from the seasons changing? Okay, I think that would be a fun one for us to discuss together. All right. Um, and back to discussing, that reminds me, we do have a Discord, Everything Validated. Um, Connect with us on social media, Twitter, Everything Valid, Instagram, Everything Validated, Patreon as well, Everything Validated, Facebook, Everything Validated. Um, we want to connect and we want to be able to have a full discussion with the community. So definitely give us ideas, connect with us for our resources, or help us highlight resources that you like to use. For example, your stock screeners, or maybe you use something other than TradingView, for example, to do your chart reading. And we did provide TradingView on one of our episodes. But if you have something else, we want to know, and we want to continue to sharpen our blade too. So let us know here at Everything Validated. We do appreciate it. All right, so opportunities in the market. Just going to be very direct here. I want to start off by going over this article I saw. So again, CNBC, shout out to them. They be holding me down with the information. Netflix closes down 35%, wiping more than 50 billion off market cap. Okay, this is from April 20th, so it's getting a little bit dated now. I just wanted to touch on it because I feel like it speaks to where this product might be in the eyes of the consumers. Okay, so key points: shares of Netflix plunged Wednesday after the streamer reported it lost subscribers in its most recent quarter. Okay, the company shed more than 50 billion in market cap as a result, and if I'm not mistaken, it says right here, it's its first time in more than 10 years that they lost subscribers. So what does that mean for Netflix? There's a lot of competition out there right now. Okay, so at one time Netflix destroyed Blockbuster's moat. Okay, there was no competitive advantage to a Blockbuster. But now we have Hulu, HBO's, the Crabes, Paramount Plus, Disney Plus, Peacocks, all of these companies competing with Netflix's business model. And they also don't have to spend as much money to do it in terms of creating their own originals. And some just would argue that the other companies have better shows, depending on the timing, right? What do you guys think? I like some of the shows on Netflix, but it gets harder to stay with them as the price continues to increase. So maybe this is speaking towards a little bit of resistance from the consumers, letting Netflix know that you can't just do anything. Like, how are you going to increase the price when times are getting worse for us and the shows are kind of staying the same, and a lot of shows are even leaving? So I'm interested to see if Netflix can recover from this. Some people used to call the major tech companies in the US FANG, Facebook, Apple, Netflix, Google. But I think that acronym is going to have to change a little bit going forward. And with Netflix making some movements, I'm just going to touch on this other movement before I ask you all about how you are seeing opportunities in the market in terms of stocks. Before I do, though, Spotify made a move as well. They bought Pod Sites and Chartable. Again, it's kind of dated as well. February 16th. So what these two companies do, Pod Sites and Chartable, is they're going to help Spotify basically have a monopoly on podcast analytics, and they're going to help podcasters better understand the number side of things, and thus how they can continue to market or create content for their desired demographic. Okay, so it's age information, and Spotify just bought themselves some new information. It's probably going to help them further sign these podcasters to the big deals we've seen them do, like the Joe Rogan and oh, someone here's got my name. That's coded. All right. So with Spotify making those moves, it brings me to think of a similar sounding investment. Shopify, okay. Kind of, let me see here, the 1 month. Hopefully you guys can still see my screen. 6 months has not the best 6 months. 1 year, definitely not the best 1 year. Yikes. Okay, so where's the PE rate? Oh my goodness. Okay, and I will break down PE ratio, the price to earnings ratio, but based on that metric right there, Google Finance is trying to tell us this stock is extremely overpriced compared to how much they earn. I think Shopify is a great company. Again, their competitive advantage, probably just their e-commerce and getting to the market first with the subscriber system. I don't know. Headquarters in Ottawa, so they're Canadian. That's great for me as an investor. The reason why I bring them up is because, as you can see here, the stock is priced at $4.74. This is a great international company. However, that might be too expensive as a price for many retail investors, and they will be doing a 10-to-1 split June 26th. Okay, so if you're interested in getting in on that, June 26th should be a 10-to-1 split. If I'm not mistaken, let me just double check that they're doing 10-to-1 here. Yep, 10-to-1 split. Okay, so if you for every one of those stocks that you may hold, you'll be getting 10. Okay, and thus it should be 10 times. It's easy for us to buy, right? No more $470, maybe just $47. Okay. Similarly, don't mind the typo, right? Amazon is doing a split as well. Okay, and theirs is going to be a 20-to-1 split. Okay, and that has been slated for June 6th. And you can see why they would need that kind of split. I mean, 2,300. Not many retail investors are dropping that. Not saying it's not worth it, but, and even that has a lower PE ratio than Shopify, right? So, I mean, market cap, volume, there's a lot of reasons why maybe Amazon is a better investment than Shopify, but it's not financial advice. But either way, if you're looking to get in on these companies, June 6th for Amazon, 20-to-1 split. June 26th for Shopify, 10-to-1 split. And last but not least, another 20-to-1 split. Very important. It's happening July 15th, from what I've read, and it's Google. Okay, GOOG is the ticker, alphabet in Class C is what's showing on my screen. Okay, so if you want to get in on Google, 20-to-1 split, July 15th. This summer has opportunities for us. I think it can be great if we take advantage of what's out there for us. Okay, so what do you guys think is going to happen with Netflix? Is it coming back? What do you guys think of episode 8 and me doing it in this format? And will you be getting in on these stock splits? Okay, I think it's a great time for people to take advantage of the lower prices on great companies. And if you were never invested before, great prices are a great time to start. Okay. Once again, that's the opportunity segment by Malik. I do want to say, take a look at your portfolio. Okay. But today's daily definition before we slide into hip hop is one of my favorite words, okay? Accretive. That's spelled ACCRETIVE. Accretive, okay? The definition: characterized by gradual growth or increase. So they use it in a sentence here as an adjective. Despite the accretive sediment measured, there is a clear shoreline erosion. Okay, so let's make sure our investments stay accretive in terms of interest gains, dividend payments, and just lessons learned. All right. Now over to hip hop news. There's been a lot going on since our last episode. I personally have been getting lost in boss music. For me, that's going to be Yo Gotti, Rick Ross, Kendrick has dropped. There's been news in the YSL camp. Thoughts and prayers for everyone involved. Future drops a fire album. Drake, $300 million deal. What does this mean for the crypto space and for Canadian music? Lotto drops her debut album. And then in terms of the Lobby Boys, we have Mano, Jim Jones dropping New York young sounding drill music from our New York OGs, and I find that pretty interesting. But to that point of the Lobby Boys, is it clickbait or not? Seeing as, because it's not the first time I observed this. Let me know what you think. The Migos, they drop Unconfused, right? I don't know if Offset's out. He did unfollow Quavo and Takeoff. I don't think Offset's out, but I feel like this is a little cloud chasey, and I'm usually not the type to connect that dot, but they drop Hotel Lobby knowing that Lobby Boys, and I feel like everyone who's in the music industry knows, because even, I mean, fans knew Mano and Jim Jones are dropping Lobby Boys this summer, right? There's been all type of promo going into that via other podcasts and other forms of media. And then Quavo and Takeoff drop Hotel Lobby. So now when you search on your DSPs, Lobby, Migos come up. And it's not the first time they've done that with a type of buzzword, the dab situation and all that. So I wonder, and even the straightening song being sued for stealing a man's idea and another artist's idea. So I wonder if there's just trying to use their position to kind of be a shark in the industry and take advantage of other buzzes, seeing as their product has maybe reached maturity and beyond? Or are they giving themselves a chance to be born again with the breaking dissemination of a group into just Quavo and Takeoff? So, I mean, that would be a sad moment for the Migos. I'm a fan of the Migos as a group. Put them right up there with the Beatles for me. So only time will tell. And in terms of Young Thug and Gunna, some of our favorite Atlanta artists, it's the same situation for them. Okay, so in their stead, there's going to be a lot of other music, a lot of other vibes we can catch on to keep our spirits up, and maybe similar to crypto YSL being indicted. I'm not partisan in any way, but maybe with all these incarcerations and passings of our favorite artists, rest in peace Lil Keed, provides us a reset in terms of our musical interests. So maybe we can reset and listen to some new music, some other music, some different regional music that can provoke some thoughts, start some notions in your head. I think that's very important for our growth as well. Okay, so we covered Luna, we covered educating yourself, daily definition, and as well how and why you should rebalance your portfolio in down times. That only leaves us with one thing left. I wouldn't leave here without providing a resource. Okay, let's keep it valid. So this one's pretty cool. I'm going to go ahead and share my screen for this one too, because this one, I feel like you got to see it to believe it. Okay, so here it is. I'm going to provide the link for this. It's getsmarteraboutmoney.ca/calculator/fee-calculator. Again, the link will be in the description. Why this is important? Well, if you're using an investment professional, a trading desk, a brokerage, they usually have a fee associated to letting you trade with them, right? So for example, what this calculator is going to let you see is how much the fees would cost out of your investments over time. And I think it's really a positive thing, because over time, I want to know what my investment will be. Not only that, I want to know how I can, how much I would keep after the fees, right? So if the market gives you an average 7% return after inflation, right? But your local bank mutual fund group is taking 2% fees, or your local investment group is taking 2% fees in 10 years of growth, how much would that have been? 1,500 in fees, but you still would have 14,000 in value, right? So at the end of the day, 13,000 here in value minus the fees. So at the end of the day, I feel like this is an important tool that we should use to compare who can provide us the investing service, right? You type in their fees right here, compare them, you'll know who you want to go with. And not only that, it helps you be realistic about what numbers will be in the future by giving you a compounded calculation. I think this is a really important resource, and it's offered by the Ontario Security Commission, and thus it's free. Okay, we are going to put that in the link and the episode tracker for you to keep everything valid. So if you want to calculate the fees that your mutual fund or your brokerage is charging you and what it will look like over a duration of time, this is a great way to do so via getsmarteraboutmoney.ca. That's our daily resource of the day. And I think with that brings us to a beautiful wrap of episode 8 of the Everything Validated podcast. I am your host, Malik the Engineer, aka YDM Beats. And if you still want more information, please check out the rest of our videos on the Everything Validated YouTube channel. And if you still want more information, check out our Patreon. Keep it valid. Thank you for watching. Peace.